Hello and welcome to the Block Solid podcast, where we talk about the evolution of the securities market, the newest technologies that enhance and revolutionize the world of securities and real estate as we know it, and how we, the owners, the buyers, the renters, the investors, the entrepreneurs, the lawyers, the consultants can benefit from it all. I'm Yael Tamar, CEO and co-founder of Solid Block, a pioneer startup and real estate organization. And I'd like to welcome Natalie Lederman to this podcast today. Hi, Natalie.
Hi, Yael. Thank you so much for having me today. I really appreciate the opportunity to speak with you and your listeners.
Yes, absolutely. I'm so excited to talk to you specifically today and this week after, some really, really interesting events of last week, the fallout of of several banks. And it's just basically on everybody's mind. There are all these questions of how you can navigate this industry with so many different caveats and so many legal and compliance limitations. And you're at Sullivan Law, and you guys specialize in various deals concerning crypto, but also crypto and M&A, blockchain technologies, and so on and so forth. So what I would love to, first of all, to start with is talk about your position, how you generally arrived into this market, talk about the firm, and then we'll go into really interesting details on today's market.
Sure. Those were a lot of questions, so I'll do my best to hit all of them. And if I miss any, you can just prompt me or let me know. But Natalie Lederman, I'm a corporate and M&A partner, and I'm practice group leader for the fintech and blockchain group at Sullivan Worcester. We're a Boston-based mid-sized firm, pretty international practice. We have offices in New York, DC, and Boston, in London, and in Tel Aviv. About 200 and some lawyers at any given time. So we really hit sort of the mid-sized law firm kind of structure. And we have, we're a full service shop. So we do the M&A, the crypto, the fintech, the blockchain stuff, the very sophisticated tax practice, real estate practice, a T&E group. We have top of line litigators. So it really is a one-stop shop sort of place. How I got into fintech and blockchain in particular, I always had an interest in intellectual property. And I was working in intellectual property before becoming a lawyer. I was doing in-house M&A work and intangible asset valuation at a Big Four accounting firm before I decided to become a lawyer. And then a few years into practicing law, blockchain kind of came onto the scene, and we had a partner who lateraled over to our firm in probably 2018, who was instrumental in the T0 offering, the first ICO ever in the US. And so he said, I really think that this blockchain thing is going to take off. What do you think, and are you interested? And the reason he tapped me is because I have a very sort of traditional corporate law upbringing and securities law upbringing. And as we've come to learn, that type of legal practice lends itself very well to understanding cryptocurrency and blockchain and how the US views these digital assets today. So we got to work, and in about 3 months, it was just like the Wild West. So by, the fall of 2018, probably, it was just, all sorts of ICOs, which evolved over time. Now we represent a pretty diverse set of clients. We represent issuers, we represent exchange platforms, and other players in the space who are interested in developing different products using blockchain technologies and different types of fintech.
Okay, this was great. Thank you for your background. It's really exciting that there are firms that specialize in this field, in this area, because we know that there are quite a few things that come into the market all the time, and we kind of need to stay on top of the legal and compliance things. And at the same time, who is going to be able to explain those issues to us if not lawyers specializing in the space, right? So we would rely on
Great
someone
question.
yeah,
We do our best with the guidance we have, which I'm sure we'll get into, but yes.
Exactly. So I want to know, how do you actually prepare to give the guidance? How do you get to know the system which actually is developing? It's kind of like climbing a ladder and building it at the same time. Do you communicate with the SEC and with FINRA and ask them questions to be able to provide this guidance? Do you have a consortium of different law firms that specialize, or lawyers that specialize in the space? And how do you get there?
Yes to all of it. We start by doing a lot of reading, and we have a lot of news alerts, and we have a lot of, friends and colleagues who are thankfully, frequent, active posters and reporters in the space who keep us up to date on what's going on in different hearings and court cases and different enforcement actions. We're members of a few sort of major organizations and thought leadership groups here in the US and internationally that helps to keep us on top of new developments and ways of thinking about different interpretations of the laws here in the US and overseas. And yeah, depending on what our clients' needs are and what they're looking to accomplish, we will occasionally be in touch with regulatory authorities to understand what they can and cannot do, how things would be viewed by those regulatory bodies if they were to take certain actions. So it's a combination of all of those things, but really a lot of reading and learning and internal sort of thinking and collaboration to make sure that we're on top of it and thinking about the issues as correctly as we can be, given sort of the uncertainty that still exists in the US market in particular.
Right. Very cool. So it's exciting to me how, lawyers can and compliance specialists can also help pave the way, right? And I know quite a few, I'm not even sure that lobbyist is the right word here, but,
Right.
I know a few legal professionals that actually help draft different things
Yes.
that they ended up becoming, new laws and new regulations. So
yes, we're proud to be part of those organizations as well, and proud to be contributors to those folks that are sort of shaping and changing policies now. But it is, it is a complex thing, and it is a complex time to be in the blockchain and crypto space. But it's like you said, I'm encouraged that I really appreciate that I get to work at a law firm that sort of helps clients solve these kind of novel problems. They're really sort of trying to change and shift the landscape and do creative things. And so they call upon us to come up with creative solutions, obviously within the bounds of the laws, but, come up with creative ways to work with the regulations as we understand them today in the most sort of risk-averse, conservative way possible, so that we can help them accomplish what they're looking to do. No client wants to hear no, but we get so many great, wild, crazy ideas, and we also don't like saying no. So whatever we can do to help get to yes, or help you understand why the no is a no, at least for now, that's what we do. And that's, why we focus so much on learning and collaborating in the space.
Right. And I think one of the bigger advantages to work with a firm that's focused on a specific area in which you operate is that they probably have seen a lot of use cases and can recommend a solution that they might have used before and they might have seen before, right?
That's right. We've seen it go beautifully right and horribly wrong. And we've seen, we've handled clients at all different sizes and stages of their development with all different attitudes towards risk. And,
give some examples, maybe, without naming any names.
Sure, without naming any names, sort of, crypto banking service providers that have different appetites for risk and different strategies in mind. Our job is to really help them be as creative as possible and offer advice within the bounds of the laws, and help them design new and innovative products for customers and investors. And so, it's really exciting. Some things are a little too risky. Some things are, definitely not, and definitely great, new ideas. Not that the risky ones aren't great. They're just not ripe quite yet, given where we are in the space. And so it's always a fun challenge. It feels a lot like law school sometimes, because the law school experience, you sit down for these exams and they give you a few rules and a set of facts that don't really fit into any of the rules. And it's trying to sort of give the best solution when you don't have a clear answer. And I wasn't expecting that would be my practice as a securities lawyer, where there are a lot of clear rules that you need to comply with. But it does feel a lot like law school sometimes, just because there's not that kind of regulatory clarity that we look for as securities lawyers and lawyers in general. And that aspect, even though nobody likes to be, the patient in the room where the doctor calls all the people in to come sort of look at it and study it. We get a lot of those cases, and it's a lot of fun for us, at least. It's a little painful to be the patient in those circumstances, but we get you there and out of the hospital bed. So
great. Well, that's a good start, right? You might get hit by a bus on the way out of the hospital, but
right.
by a proverbial crypto market bus,
right. There are so many. It's a highway.
Yeah, like for example, the SVB crisis and the fallout for other banks, right? And I would love to ask you what I'm asked right now on kind of a daily, right? I have people reaching out to me and asking, what should we do? In light of the bank. Where do we keep the money? Like, which exchanges, which, if we're doing crypto, which banks are safe? If we, everybody's dealing with fiat, of course. So which banks are safe, and how do we protect ourselves and legally, and in terms of also kind of, is there an insurance for that? Is there some sort of a contractual provisions if you have clients and you have failures, right? Does it constitute force majeure, I guess, of some sort? And what would you recommend for clients?
So we're talking about Silicon Valley Bank's bank run on Friday. We're also talking about Signature on Sunday. They shuttered they're a huge player in the crypto space, as I'm sure you're very aware, and the regulators shuttered it. They were concerned about the stability of our financial system if the bank stayed open, which obviously is unsettling. The good news
29,
is
right?
Exactly.
The top 3 banks that ever failed in the U.S.
2 in the last 3 days, right? So it's not helping the already, I think, fragile state of confidence of the participants in the crypto space. Everybody was pretty shook up after FTX and everything that's kind of fallen out since then. And it's one in a long list of sort of major regulatory events that we've seen in the last little while. Who knows if it's over? I don't suspect it's over. We can talk about our regulators and their approach to regulating cryptocurrency and blockchain in the US, if that's something we want to get into. But I think everybody is a little bit concerned, even though, we're Tuesday the 14th now, and it seems that, we've since learned that there are protections that are extended to the depositors at SVB and at Signature, so everybody can more or less access their funds. I think a few of the big things we've learned is, so the FDIC is here to somewhat save the day. They insure different types of deposits up to a limit of $250,000. So, I think we've all recognized in the wake of these 2 bank runs, perhaps $250,000 needs to be upped again. It's a great protection that exists, but given sort of some of the thresholds for opening accounts at certain of these banks, it seems like $250,000 might not be appropriate given the rates of inflation, particularly in the last couple of months and years. But, many of our deposits, we've learned over the weekend in this sort of madness of information exchanging, are insured up to that $250,000 limit. If it didn't turn out the way it turned out, and there were certain accounts, like accounts that opened in international branches or with certain custodial arrangements that aren't covered by that $250,000 limit, or that are covered but exceed that $250,000 amount, uninsured deposits and other obligations, of a bank that's in receivership, they're going to remain obligations of the receivership estate. So that means that all that money above the $250,000 limit or uninsured deposits, those get paid out only if and only when there are funds available from the sale of that bank's assets that can satisfy those obligations. So if it went a little bit differently, a lot of people would have been up a creek without a paddle and missing a lot of their funds, at least for the short term and likely for the longer term as well. So how do you protect yourself now? Because maybe it won't always end this way. Obviously, I'm a lawyer and will say, talk to your lawyer. It doesn't need to be me or any of my partners, but talk to a lawyer. Talk to your financial advisors, talk to people who really sort of understand how FDIC insurance works, gain an appreciation for that, understand which of your accounts are covered. You mentioned opening accounts in different banks, obviously an option. Does that mean you should open a bunch of accounts up to $250,000 all over the country? Maybe, maybe not. FDIC insures different types of, accounts. You can, depending on the type of account, open multiple accounts at the same bank, and each one of those accounts would be FDIC insured up to $250,000. Or in some instances, you can add beneficiaries where each one of those beneficiaries is insured up to $250,000. So that's another way you can think about solving around this $250,000 cap in insurance. I sort of zooming out the bigger picture, a really clear and thoughtful investment strategy for companies is obviously really important, and now more important than ever. You want to really be thoughtful about how you're investing your funds, where you're keeping them, where you're trading them, who has control of those funds under the various account agreements that you enter into. And also really make sure that your director and officer insurance is up to date. Make sure everybody's covered. Make sure your company is properly covered, because obviously, if it gets to the point where you need to, not need to, but aren't able to pay your employees or have to silo employees, unpaid salaries to employees can, depending on the state, obviously, because every state's employment laws are different, can end up, the problem of the directors and officers, and not just the company being liable. So I'm not an employment lawyer. I'm a corporate and M&A employer, but those are just some of the things that are sort of floating around in the last couple of days and the fallout of the bank runs that we've just gone through, in some ways you can think about protecting yourself a little bit better. But my first and best suggestion is talk to your financial advisors and your lawyers.
Yeah, absolutely. Startups are always in for much more than 250,000, right? So you get a $5 million.
Yeah, if it's going well, yeah.
Yeah. Well, I mean, if you usually, especially a later stage, you get an investment of a few $1 million, right? And
right.
So, and the funny thing is that I live in Israel, and we have a lot of startups here that had SVB accounts. In fact, I was in their local office, and most VCs were using SVB, and most of these VC startups were using it, and also executives in those companies had SVB accounts, right? So, and there was a huge fallout here as well. And
of course,
yeah. So basically, like you said, we don't know whether insurance even expands to foreign clients, right?
Right.
And so at the end of the day, the consensus here was that, if you're an Israeli company, just keep your money in an Israeli bank.
Domestic.
Yeah. So that's what I read kind of in the news. And of course, Israeli banks, it's music to their ears. So yeah, so this is really kind of definitely needs to be resolved for being able to decide like in which assets you keep the funds, right? Like, and diversification. But we'll probably do another episode on this, trying to solve the puzzle. But I wanted to ask you generally to speak about some interesting legal developments that are coming up in our blockchain and crypto space, that maybe entrepreneurs or investors should be looking out for.
Sure. I mean, I think, for the upcoming year, everybody is hoping for and expecting some regulatory clarity. I know we've been talking about it for a long time, but I really believe it this year, that regulation is coming. Financially, accounting and auditing rules are finally crystallizing. I know FASB is finally kind of getting it together, working on crypto specific accounting standards, which will be hugely helpful. There are also dozens of proposed bills and acts and laws that have been put forward and debated about and discussed in chambers of the U.S. Congress, pronouncements and orders that have been put forward by the White House. The SEC has obviously been very vocal about enforcement. So there's I think the fraud that we've witnessed in the crypto space recently in particular really kind of exposed and collapsed a lot of big players in the space. And so I think that is putting some additional pressure on regulators and policymakers. And so that's sort of why I really think that there'll be some sort of regulatory guidance this year legally. I guess the good news is, with every market collapse, there are opportunities to build something better and more sustainable and more stable, and a more sort of transparent market for our customers and investors. Yeah. So I think I think more than hopeful, I'm expecting that will be the case for crypto in 2023. But insofar as sort of developments in the space, I could see development in the space from sort of a technological perspective being a little quieter. It's not going to be the NFT craze of a year or two ago when there's all this sort of hype and new product or rebranding around digital assets, and big investments. I think investments have cooled in the crypto space over the last 2 years since 2021, when it was really kind of at a peak. And I think the financial instability is just making already nervous investors even more nervous. And so I would expect that players in the space are going to kind of, at least those risk averse ones, are going to lay low for a little bit and try and sort of operate on a business as usual sort of basis until there's a little more clarity, so we understand what we can safely do in the market, at least from a legal perspective.
Yeah, for sure. And your mention of the possibilities and opportunities that open up with any sort of market events like these is music to my ears, because that's what we're trying to build. We're building at Solid Block, and the possibility for any asset owner or any investor to really diversify their investments and offerings by leveraging one asset and being able to convert or to transfer some of the value into a different asset.
Right.
You'll end up having a wall, instead of having, let's say, having bought and holding one real estate asset or cash or crypto. You can diversify and buy digital real estate or diversify out of real estate and hold loans, a portfolio of loans or crypto or gold or silver backed securities and things like that, or maybe even traditional public equities that are tokenized.
Right. I mean, you raise a really good point. The way that you can invest a solid block is a really, I mean, relatively conservative and comfortable way to invest in the digital space and in the blockchain space. Not all cryptocurrencies, not all digital assets are created equally. There's a bunch of different types of even cryptocurrencies that we can't look at the same way. Everything is, a little bit different here. So if we're talking about something that's, issued by an issuer and minted by an issuer, that's really sort of specific to a platform, that's a little bit different and, possibly a little bit more risky than a stable coin that's tied to, a tangible asset like gold or silver or fiat currency. So there really is a huge range. I mean, I've just mentioned two types, but there's so many different types of cryptocurrencies alone, never mind digital assets, that it really, I mean, let no crisis go to waste, right? But
Yes.
it seems like, Solid Block in particular is really offering investors an opportunity to participate in the industry in a way that's looking to sort of minimize risk and diversify investments.
Yes. So using blockchain for making good in the world. So thank you for this summary, Natalie. That you
Of
could have said
course.
it better. But
My
yeah,
pleasure.
thank you for coming on, and I would love to have you again, actually, because
Oh, thank you so much.
yeah, we
It would
want
be
to
my
touch.
pleasure.
Yeah, we want to talk about more um, really relevant things that compliance is a huge part of the industry. So
Oh, there's so much. How
we'll
how
be
long do
back.
you have?
Yeah, we'll be back. But thanks for joining me today on the Block
My
Solid
pleasure.
podcast. If you want to get in touch with Natalie, I'll include the contact information in the notes, or go to sullivanlaw.com. And you can find us on Spotify, Apple Podcasts, or by visiting the website at solidblog.co/podcast to get some notes and additional resources. If you enjoyed the show, don't forget to rate and review, spread the word. Thanks, bye.